Good morning everyone. I am Dr. A. Naglakshmi, Assistant Professor, Department of Commerce with Finance in Dr. SNS Rajalakshmi College of Arts and Science, Coimbatore. Today I am going to make a brief explanation about the objectives of taxation and the concept tax versus duty. First, we have to know what are all the objectives of taxation. See, why the tax is levied. The primary purpose of taxation is to raise revenue to meet huge public expenditure. See, roads, NH roads, state highways, where we can reach to the destination easily, quickly, and without any discomfort. So how the government will lay the roads? It incurs expenditure. So the government need the source of income. One source of income is tax. Not only in India, all the countries in the world levies tax on their citizens. Most governmental activities must be financed by taxation. But it is not only the goal. In other words, taxation policy have some non-revenue objectives also. Not only revenue objectives. There are some non-revenue objectives for collecting the tax. We have the first objective was economic development. What I said you. So government should, that is the country should have economic development. They should raise the capital. That capital accumulation has to be used for the economic development of the country. What are all the types of economic development? We know they have to spend for the education, they have to spend for the health care, they have to spend for the electricity, water, roadways, etc., etc., etc. So for all these things, government has to get the tax from the individuals as well as from the corporates. For the infrastructural development of the country, for developing new government sectors, it will provide incomes, it will provide employment opportunities, everything. So the main purpose is for economic development. The second purpose is full employment. So when a full employment is there in the country, everyone will be earning, everyone will have a good standard of living, everyone will pay the tax. Those tax will be again given to the society and for the country. That is said to be the objective. Second objective, full employment. Next is price stability. Price stability is a very important concept. If we buy, for example, if we buy 1 kg of tomato at the rate of 10 today, and tomorrow morning, if the price is 150, is it possible for us to survey? No. So the government will concentrate more on price stability of the goods and services for the well-being of the citizens. So here taxation plays a very important role in the price stability. They will control the prices. Inflationary tendencies, then stock market fluctuations, everything will be inside that price stability. Next, control of cyclical fluctuations. Cyclical fluctuations means boom, that is product life cycle, country's economic growth life cycle, everything. If it is in a initial stage growth, then it will attain some maturity, then it will again grow, then it will come, that is regression period, the boom period will that is decline to the regression, and then it will come to the initial stage. So these types of fluctuations has to be managed by the government, controlled by the government with the tax. Next, reduction of BOP facilities. BOP. What is BOP? So, tax like customs duties are also used to control the imports of certain goods with the objective of reducing the intensity of balance of payments. BOP is nothing but balance of payment difficulties and encouraging domestic products of import substitutes. What? Nothing but here our own country's product has to be sold inside the country. Domestic products has to be used by the people. If we make more tax on import that is import for the import, then the it will automatically reduce the import of goods from other countries. Our country domestic products will get good market in the country, and it leads to economic growth. That's a very important objective, that is reduction of BOP difficulties. The last one, what we saw earlier, this the taxation includes non-revenue objectives also. What are those non-revenue objectives? Non-revenue objectives means inequalities in the taxation system has to be eradicated. That means they introduced, after a long process, they introduced a concept of progressive taxation. Progressive taxation means nothing but when we earn less tax to be paid. When we earn more, we have to pay more tax. Here, poor people should not get affected, and the rich people should not be sophisticated. Okay, that is the very important concept which is reformed by our government in the form of progressive taxation. Then next topic is tax versus duty. Yes, what we think tax and duty is the other names. No, there is difference. Tax is levied on citizen on wealth, income, service or sales, but duty is levied on import and export of goods. It was introduced, tax is introduced by Sir James Williams. Duties are introduced by the Constitution of India. Tax is introduced in 1980 and duties are introduced in 1962 in India. The objective of the government towards tax is the increased remuneration to meet society's expenses. But the objective of the government towards duties is safeguarding the domestic industry, BOP difficulties, reduction of BOP difficulties. Subcategories in taxes: direct tax, indirect tax, progressive tax, regressive tax, proportionate tax. These are the subcategories comes under taxation. Here in the aspects of duties: excuse duty, customs duty, basic customs duty, countervailing duty, additional customs duty, special duty, safeguard duty, national calamity contingent duty, anti-dumping duty, education cess on customs duty, protective duties. So there are many subcategories. This is what the difference between the tax versus duty. Thank you so much for your patience listening.